Yeah. All right. Good morning, everybody. Happy Wednesday. It's Hump Day. Welcome to the Morning Show, Stock Market TV. Spencer, JC, Steve, Alfonso with you as always. Let's see, what are we talking about today? We got Sam Rowe on the show. Always a pleasure to talk to Sam. He has one of my favorite, if not arguably my favorite, Substack. So that'll be in about a half hour, 9 o'clock. We'll have Mornings with Mary, as we do every Wednesday at 9:30. We got a couple of earnings on the radar. We have some other news to discuss. JC has charts. Steve has charts. The chat's ready. Rachel's here. Jason, Joel, Goodell. Did I say that right? Phil, Dawson, Orlando, Ravi. Good morning to you all. Hope your day is off to a good start. Enough of that. Let's get the show on the road.
Hey now, happy Tuesday. Oh, today's Wednesday already. Time is flying by. I would have bet my life today was Tuesday. Today's Wednesday. Conference call tonight. This is like my Christmas. It's like if Christmas and Hanukkah had a baby.
It'd be
did
Wednesday.
technical analysis.
Well, actually, in Miami last week, JC actually told me that his favorite 2 days, I guess, of the month are when he's preparing for the two calls. Why don't you tell everybody why that is?
I get to play I get to play technical analyst guy. You know, I shut everybody out of my life. Everybody, no meetings, nothing. Everybody, leave me alone. We got business to take care of. You know,
he turns his phone off and he looks at thousands of charts.
Yeah, no, I really like it, but you know, it's rarely specifically the day of. It's kind of like the few days leading up to it, and then the day of is that much more extreme. You know,
JC gets to feel like he's like 28 again, right?
Yeah, I love it. You know,
Yeah.
I get calls about like, you know, our vineyard in Napa Valley. I was like, no, not today. We could discuss tomorrow. Today is chart day, right?
Are we going to see Kyle next month?
Of course, we're going to see Kyle.
Great.
We're going to see Kyle. Kyle's helping us with the Cabernet Sauvignon. We're going to see Sebastian. Sebastian's helping us with that 90-year-old vine. Zinfandel with a little Carignan. Ooh, it's going to be nice.
So what are you going to talk about tonight?
I'm going to talk about the market. I'm going to talk about just the regime change that we've seen over the last several months, or the last 10 weeks in particular. We've seen sort of that shift in dynamics. And I really have a great chart, you know, to talk about that. Why don't, what do you say we hit that bumper there, Spencer Israel?
Yeah,
Sure.
say more about these dynamics.
No. The kids say less, Steve. Say less.
Oh, really? Less
Say
is
less.
more.
All right, why don't you throw up, why don't we do a quick little rundown, and then we'll rip through a few charts. So you got the Dow futures up 50 points today. Pretty much flat on the day. NASDAQ futures about the same, 30 points, about 20 basis points. No big deal for the NASDAQ. So Dow hovering, holding that 38,000. S&P 500, 5,100, up almost 1/3% here in the pre-market. You've got 30-year bond futures down again. Surprise, surprise. Not down much. Pretty much flat on the day. Down a little bit. Down to under 114 for 30-year bonds. Wow, these things are getting destroyed. Gold futures down 1/3%. Hanging out right around 2,400. Silver futures up 50 basis points, 28.5. Copper futures up a full percent today. That puts it at $4.34. Crude oil down 1%, hanging around near 84.5. Dollar pretty much flat in early trading. Not much going on there in yen and euro. You got the volatility index, 18 for the VIX, guys. 18 for the VIX. And then over in the old funny money, Bitcoin. Bitcoin down 1,500 points this morning, 2.4% down to 62,300 as this correction continues. Ethereum down 2%, down to 3,000. Ethereum really the underperformer here for sure. And then we'll finish up with Solana, which I guess you can argue has been the short-term underperformer. Solana down 35% in what, a week? Maybe a little bit more. down another 3.5% down to 130, and that puts total crypto market cap. Spencer Israel. Total crypto market cap 2.2 trillion. Off quite a bit. How are we feeling about that?
Solana's been getting crushed.
Solana has indeed been getting crushed. Solana got back to those former highs where it started to crash the last go around and crashed again. I can't believe it. Can't believe it.
But again, overhead supply just remains the theme for so many risk assets, right?
Yeah, totally. It's a different regime. Why don't we go to that first chart there, Spencer? I think this tells a really interesting story. This is a great chart put together by Grant. Shout out, Grant. What do you think about this? Too many colors, or you're into it?
Oh, wow.
Are you into it?
Yeah. I know this one.
All right, so what are we looking at here? We are looking at in green, we're looking at the percentage of stocks above their 200-day moving average and above their 50-day. So in other words, these are stocks in the S&P 500 that are in longer-term uptrends and then short to intermediate-term uptrends as well. That would be in green. Down in yellow, you're looking at the percentage of stocks above their 200-day but below their 50-day, and that's the category that's winning the most these days, and I'll get to that in a second. And then in red, you've got the percentage of stocks below their 200-day and below their 50-day. So those are in some of the worst markets where the majority of stocks are both in longer-term downtrends and shorter-term downtrends. So right now, the big regime leading the pack is the percentage of stocks. You can go to the next chart there, the new slide 2. The percentage of stocks that are above their 200-day moving average, but below their 50-day moving average. And just to be clear, there's nothing magical about the 200-day or the 205-day or the 53-day moving average. They all going to pretty much tell you the same thing. Large percentage of stocks, actually over 2/3 of the S&P 500 is actually above its 200-day moving average, which are longer-term uptrends. But a huge percentage are below their 50-day moving average. So that's sort of the stitch there.
Go back to like the crazy area chart.
So yellow light.
The world needs more area charts. Can I just say that?
Yeah, but it's like visually misleading. You really have to look at the labels on the y-axis because I see a lot of green in the current reading.
Right. So what you're saying is
zoom in. You have to zoom in.
Yeah. So the y-axis is telling you that we just got the spike, which is why the next chart's so important. Go to the next one. So the next one just shows the spike.
This just happened then. That's why the area chart's you can barely see.
That's right. So we got to figure out the visual there. I agree with Strazza. We got to figure that out. But there it is, highest reading since 2021, and basically it's over 2/3 of the S&P 500 stocks are above their 200-day moving average, but less than 1/3 are above their 50-day moving average. You're looking at 30% of the S&P is above its 50-day.
JC, doesn't this speak to like a trendlessness or sideways type of market or a corrective sort of market where primary trend may be up, but intermediate and shorter term 50-day here?
Yeah, and it's not so much like, oh, what does the market usually do after this happens, when there's a solar eclipse and, UConn wins the championship. Like, it's not one of those things like on a Wednesday. Like, it's not one of those silly things. It's more like, okay, what type of market environment are we in? Like, that's it. First we identify what type of market environment we're in, and then we want to pick the tools and the strategies that are best for that particular type of market environment. What are we seeing this year? We're seeing that these longer term uptrends are still in place for sure. We've been in a bull market for almost 2 years now. However, in the short to intermediate term, things are a lot messier. A lot more stocks are in short-term downtrends. A lot more stocks are in short-term sideways trends. Very few stocks, less than 1/3 of the stocks in the S&P are actually in short to intermediate term uptrends, which is very different than over 90% of S&P 500 stocks were in short-term uptrends just a few months ago. So it's a very different sort of scenario is really how I like to look at it. So again, first, what type of market environment we're in, then what are the best strategies to employ? And when volatility is up and markets are a mess, traders get chopped up. Chop, right? Getting chopped left and right. Breakouts are failing. We're not seeing consolidations resolving higher. When they do, they fail, right? It's really
failed bases everywhere. Failed bases, JC. Small caps.
So what do we do? Sell premium, maybe. Just Jim Rogers, like Jim Rogers said, I just wait around and wait to see somebody who dropped a dollar bill on the sidewalk, and I walk over there and I pick it up, right? That's what this is. Traders getting chopped up. Think about it like they're making donations. They're making donations to the market, getting chopped up, paying way too much for options, right? Because volatility is elevated. They're not doing the calculations. They're being irresponsible. They can't employ any patience whatsoever. Their human emotions are just going bananas. And as investors, profit from these humans making poor decisions, right? And we can sell them the very expensive options that they're just dying to buy because they don't have the willpower and cannot overcome. They can't just sit on their hands and wait. They can't collect income. They have to be YOLOing at all times, right? Silly humans. They're making donations. It's up to us.
This chart is that same chart, but just put it in a different visual way.
This is a lot better. Nice job, Fonz. So
No,
but you want to know something?
Grant.
This would be better. This would be better
Fonz,
if those were area charts. We could have 3 area charts, but the world needs more bubble charts. The world needs more area charts. I can't emphasize that enough.
So listen, hold on, Spencer. Me and Sean were laughing yesterday because it's not like me. I was pinging Sean, found myself selling premium, which is not something I often do, but I've been so bored sitting on my hands for weeks now. Selling some puts yesterday. I had to check with Sean, like, am I doing this right?
Yeah, I mean, listen, I really like that John Deere Iron Condor, right? So there's a couple of things, and we'll have Sean on the show tomorrow, and he could talk further about it. But this is how I like to look at it. If we're selling premium in an ETF, I have no problem being naked short, a strangle, right? So stock's at 100, or an ETF is at 100. Sell the 110 calls, sell the 90 puts, right? Sell the out of the money calls, sell the out of the money puts.
Yeah,
collect that income. Very simple. When we could buy it back for half of what we collected, we unwind the trade, we take the profits, and we move on to the next one. Very simple. But in an individual stock like John Deere, for example, or any stock, being naked short calls and naked short puts, like, it's not great for being able to sleep at night, right? Anything can happen. In the ETFs, you're mitigating that risk dramatically because there's so many stocks in a basket of an ETF.
Yeah.
So rather than just being naked short the out of the money call, naked short the out of the money put, what we're going to do is we're going to take some of that money that we collected and we're going to buy a further out of the money call, and we're going to buy a further out of the money put. And that's called an iron condor. And what that does is that hedges our position. So in the ETFs themselves, I don't necessarily you could, but I don't think it's worth it to make less money to hedge yourself in an ETF. Maybe it is to you. To me, it's not. But in a stock, it definitely is. Plus, you tend to get higher premiums in individual stocks. So you can take some of those higher premiums and hedge that out, right? So that's how I look at it. In case anybody's wondering, what selling premium means, what, walking over to the sidewalk and picking up a dollar bill actually means in practice, that's what it means to me. How'd I do?
What did Sean just did? What? Strangle in Apple, right?
Sean did a strangle in Apple, yeah.
Same as Deere.
Well, no, it's not. I forget what Sean did in the Apple. He wouldn't have done a strangle because I know for a fact Sean doesn't like to be naked short. So it would be an iron condor if it was. But I could definitely tell you that on the John Deere, because we went through it in the meeting that he was not at. Sean just skipping meetings these days.
We talked about it on the Flow Show the other day too.
Oh, we had to move the meeting because you and I were gallivanting down in South Florida. But it's not his fault. Just breaking balls. But yeah, so this is a John Deere. Here, we can throw it up here. So, sometimes we like to put trades out publicly. We do that every couple of weeks just so people can actually see it in practice, right? So members of All-Star Options, go ahead and put on slide 3. So premium members of All-Star Options obviously get these trades 3 times a week at least. But every now and then we like to show off a little bit about what we're doing. Am I dropping them in the wrong deck?
Yes, you are.
It says morning show deck 416. That was yesterday. Are we in a new deck now?
We turned the page.
About the new deck.
No, we are in the same deck as we always are, but you're on the wrong deck.
It says morning show slide deck, April 16th, 2024. That was yesterday. What are we doing?
Man. We use the deck for the week. Where you been?
Yeah, we use the deck for the week. It's still the same week.
I know. Fonz and I are in the right place. Maybe you're not.
I guess I'm not. No, here. All right. So here, do we have the
There you go.
Here,
Yeah, you're good now.
JC, we're getting questions about the Geo Bowden. It's been a few days since you talked about your meme.
You want to talk Geo Bowden? We could talk Geo. We can talk about cats and dogs world. I mean, we can do it if you want. You want to go there? I'll go there.
Are they holding up, or are they getting whacked like everything?
Hold on.
else?
Let's finish up on the Condor. All right. These are real assets. We can talk about the funny money now in a minute. Let's talk about the real assets. So what are we doing here? So John Deere is a mess. It's just a hot mess, right? So what are we doing? We are selling, right? So let's check on the price of John Deere as we speak. Price of John Deere, 390. Let's just call it 395. It's 393 right now, right? That was yesterday's close. So what are we doing? We are selling the 430 calls, right? So these are out in June. These are $35 out of the money, basically, right? We're collecting that $6.90. Then we're selling the 350 put. It's about $43 out of the money, right? Collecting 305. So what is that? It's about $10 roughly that we're collecting. But then we're taking a little more than half of that, and we are buying a further out of the money call, right? In this case, 10 points out, right? So we're selling the 430s, we're buying the 440s. And then the put, same thing. We're selling the 350s and then going out 10 points further and buying further out of the money puts that are 10 points further out. On collecting 226 on the puts, 490 on the calls, right? So now we're hedged. Right, so Deere can go to 0 tomorrow, can go to $1 million tomorrow. We're good. Our risk is well defined. Our max loss is $6.85. Can't lose more than that. So I'm into it, and these are much higher probability trades than something like YOLOing call options. You know, those are lower probability trades. Now you're getting paid handsomely when you're right in those lower probability trades, and there's nothing wrong with putting on a low probability trade. We put them on all the time. But there's a time and a place for everything. This is actually a much higher probability of success trade. We're making less money, but we're dramatically increasing the chances of us succeeding.
This is lower risk, lower reward, higher probability versus something like a long call strategy where it's higher risk, higher reward, far lower probability.
But I will say this: a lot of times where we're buying those call options and they're lower probabilities of success trades.
It's a lower win rate strategy.
It's a lower win rate strategy, but the risk is so well defined and it's so cheap.
Yeah.
That it's worth doing the, it's not really a YOLO. It's more of like it's more of a lottery ticket than a YOLO, but a lottery ticket that, with much better odds than actual lottery, right? Lottery is a tax on the stupid, right? As we know.
It's a tack on strategy for most portfolios, right?
Because if you do this enough times, because you can't just do this the entire year, right? There's a time and a place to implement these sorts of strategies. Let's call it 3 times, 3-4 times throughout the year, 2, 3, 4 times throughout the year. It's kind of like the sweet spot for these sorts of strategies. And this is one of those times. And when you look at the end of the year and you look at how many times you did this and collected those incomes and, knocked out, 10 out of 13 of these, that's 10 or, 7, if you subtract the other 3, 7 times that it pays for those call options, right? Those call options that may have worked or may have didn't work. This income pays for those trades, right? So think of it like that. This is like eating your vegetables, right? Everyone just wants to go to the ribeye and the chocolate cake. I get it. I'm into the ribeyes and the chocolate cakes too. But, mix in some broccoli, little broccolis, maybe some asparagus, right? Selling condors, putting on condors, selling strangles. That's like eating your veggies. How am I doing? Right?
I like it.
You like it?
Yep.
Well, as long as you like it, then it must be good.
I want to talk about tech stocks. What do you think about tech stocks right now?
Let's see. Small cap technology is down over 10% just this year alone.
You know what? You're right. Thank you. I want to talk specifically about big tech stocks.
So Apple and Microsoft.
And friends. Yeah.
Yeah. I mean, this small cap tech, what a disaster. What a disaster. Okay. So you want to talk about large cap tech. Tell me why I should care.
If we're entering some sort of a corrective period and the tape's going to be increasingly defensive.
You're saying we're entering one? You wouldn't say we've been in one?
No, I would say we've been in one. Play along.
In the early stages, 10 weeks into a correction-ish. 8 to 10.
It's hard to say that because, cyclical things were working up until just recently. But I would say maybe a week or so at the index level at least. But mega cap tech, I think, stands to benefit from some sort of defensive rotation that could come from this. Do you disagree?
Yes.
Why?
I just don't consider large cap technology to be defensive. Large cap technology tends to be an outperformer in bull markets. I don't necessarily see anything defensive about it.
All right, let's look at some charts.
Please.
So this is mega cap tech. Throw this up quick, Fonz. It's in the chat. Mega cap tech, MGK is a good fund for Mag 7 and friends, right? Got the breakout. I guess you could call this one of the leadership indexes of this cycle. We never got a breakout in the relative trend, though. So if you look in the lower pane, this is mega cap tech, mega cap growth, really, versus the S&P 500. Knocking on the door again. This is a multi-year range, just like a lot of these charts we've been talking about in energy materials, right? Multi-year range here. I think this resolves higher very soon. And I think charts like Google and Amazon are valid breakouts, and things like Uber and Taiwan Semi and ASML keep running. And AMD and CrowdStrike, they hold their prior cycle highs. I think these old leaders, or early leaders, we should say, might be a really good place to hang out in a tougher tape. Remember, when market internals were really thin last year, these were the guys that you wanted to be in.
Yeah, I don't like it. I think it probably falls apart. This is it's the cues. That's all it is. It's the cues.
Yeah,
you know what I mean? Like, we don't have to get cute with like this other less liquid ETF. It's the cues. How's it not?
Yeah, fine. Listen, so many ETFs are the cues, though.
That is also true. This one more obnoxiously so. You're right, but this one even more so.
But yes, NASDAQ 100 relative to the S&P 500 looks the same on relative terms, absolute terms.
Yeah. Look what's in this. It's what you think it's in it, right?
I think you go back to the well on these names right now, and there are some great setups.
All right, knock yourself out. I definitely will not be doing it.
I'm a little confused.
Look at confused. What's that, Spencer?
I'm a little confused. We're always taught that tech trades with a higher beta, right? So it outperforms.
I would argue materials and energy have a far higher beta.
I didn't mean the highest beta. I mean higher than like the overall market, right? So
slightly, but not these ones, not these tech names. These are blue chips.
Right.
Yeah, it's not much, Spencer.
Okay, so that's what I'm getting at then, right?
It's really changed over time, right? Like
that's what I'm getting at. Okay, so
these are no longer unprofitable companies. They're the most profitable companies. So that beta has really gone away in time.
Okay. All right.
And by the way, for the record, even in the small cap, you look at the small cap technology ETF, you're still getting a beta of 1.1.
All right, that's not much. All right. Okay, cool.
Yeah, I don't know and I'm curious to see, like, we're taught that it's like this, like who's doing these teachings?
Well, I mean,
no, it's fair. I hear you.
No, I'm just curious, like who says that?
I feel like it's just a basic assumption that tech outperforms and then underperforms. Right?
Yeah, growth is beta.
Right.
Yeah, sure.
Tech is growth is beta.
I think that's one of those like common knowledge things that's maybe not so true in our world, or at least becoming less true. If you go down to the ARChy growth stocks, 100%, right? Some of the highest beta, always. It's the more speculative stuff. Speaking of which, these reversal patterns, and do we have the IPO index handy? I got it. Have you seen the IPO index, small cap growth, IWO? You don't want to see these bases come undone.
Why wouldn't I want to see that? I have no problem with those bases coming undone.
We know you have no emotions, but as someone who's bullish right now, I would not want to see these guys fall back.
You're bullish on small cap growth right now? Why?
Bullish on the broader market. Why do you make this so difficult?
You think
bullish stocks, right?
Stocks are a mess, dude.
No. I thought we
Are
just
you-
agreed. We just agreed that we're in a yellow light. That's not red and that's not green. It's yellow.
I'm still buying stocks.
Yeah, all right. I'm selling
finding it
premium to
hard.
you.
I'm having
You're
a hard
welcome. You're welcome to be one of these traders that are getting chopped up, that are making donations. I'll be one of the ones that are collecting those donations.
having a great year.
Nobody said you're not. So am I. Nobody said you're not having a great year. That has nothing to do with now.
Yeah, sure. I know. I told you. I'm selling premium.
I'm having a great year. Yeah, I had a fucking great year last year too. So what? What does that have to do with April?
You know, you've been in this bearish mode all year, and God, what the indexes have fallen for a week here now.
First of all, it's not a bearish mode.
Listen to you.
The market has been
Jeez.
deteriorating for 10 weeks. So I have just been observing that deterioration and acting accordingly. I'm not one of these people that's going to close their eyes and pretend it's not happening.
Up until last week's sell-off, longs in materials, energy, financials, even tech were working so well for us.
Great. The Dow is flat
like,
for the
this is-
year. The
this is a
Dow
couple-
Jones Industrial Average, the world's most important stock market index in the history of planet Earth, is flat for the year. Flat.
You sound like a perma bear.
You want to do the 0.0, Mr. Blutarski?
Again?
Go show me some charts of things priced in gold.
0.0.
That is your Dow Jones Industrial Average, the world's most important index.
So anyway,
Not my fault. It's not like I pressed the button and made stocks stop going up. They just did.
oh, you didn't.
Yeah. What do you want from me?
Yeah.
If stocks were going up like last year, remember last year when stocks kept going up and we were talking about it every day? Remember?
I do.
This ain't that.
It's not.
This ain't that. What do we say we bring in Sam Rowe?
I'm going to mark up some charts.
You go mark up your charts. I'm going to talk to somebody who likes to tell it like it is, Mr. Sam Rowe.
All right. Let's bring him on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Sam Rowe in the house.
How's it going?
What's going on, my man?
Thanks for having me back on.
I want to give Sam props. Back in the at some point last year when Facebook dropped their threads, Sam knows more about social media and this stuff than I do. So, I'm asking him. I'm like, "What's up with this threads? You think it's you think it's here to stay or is it zero?" He's like, "Nah, it's a zero." But I will say, I think it turned into a zero way faster than even you thought, right?
Yeah, definitely faster than I thought. I would have guessed that the creators and the people managing threads would have been more responsive to the feedback that they were getting from the users. But at the end of the day, Instagram, Facebook, the way they approach their audience is very different from how Twitter or X thinks about their audience. And so, maybe it's great for some people, but I think people like us who used it for financial information or people in the news business who are using it for news, they're just not going to ever get the experience that they want. And, maybe there was some hope that they would tweak their algorithms and the ability to surface threads, but it just hasn't happened.
What do you think was their biggest mistake? It's just they tried to copy something that was already good. So why would people move? Is that the biggest mistake, you think?
Yeah, I don't know if it's a mistake or not. It really depends on what they were trying to accomplish. I mean, weird threads will appear in my Instagram feeds, and I have no idea how well that's going to work for their business. But just from my own perspective, how they failed me is it's as simple as they weren't able to figure out a way to get the users on there. I mean, how often are you posting on threads, or how often are you going on there to find, great information about what's going on in the markets?
Me?
Especially like in this business where stuff is so real time, you don't get real time information in threads. So, I mean, yeah, it's as simple. It's not real time enough for me, and the people aren't there.
Yeah. I couldn't even tell you if Threads actually is still around or if they've shut it down completely. Couldn't even tell you. Do you know?
It's still around.
Still around?
Yeah.
What's the over-under on how long it takes for them to shut it down?
No. at least a while,
What's a
couple
while?
years. It took, how long did it take Google to shut down Google? What was it? Google Plus? It took them like
Yeah.
5 years,
Google
right?
Plus, Google Reader. No, here's how this stuff works. They do it for maybe like 1 or 2 years. They're going to have really great charts that say, hey, look, we grew 1,000% in this quarter year over year. We grew 50% year over year in this quarter. And then like a year or two from now, they're just going to stop talking about it, and it quietly gets shut down because it just costs too much to keep afloat. I mean, it could even be a profitable operation within the company, but if it's dragging down the ROI for Meta, yeah, eventually it just disappears.
Then what about
Right.
the Truth Social? Do you spend all your days there with with your conspiracy theories on Truth Social? What's going on
Clearly
over there?
not. I mean, not because I mean, listen, I don't use it, but whatever is going on over there is, doesn't seem like a very viable business. But I don't know, people are buying the stock or whatever. So
Well, what if this guy, this Trump guy, what if he becomes the president of the United States and he's not tweeting? He's over on the Truth Social. Do you think that'll be good
He,
for the company or no?
he's there now. He's there now.
he's
He's
there. I
not.
mean,
He's not
so
the president of the United States. He's like
That's,
like
that's true.
an
That's
alleged
true.
criminal.
you know what? You know what happens? You know what happens? There's a handful of journalists that are still on there, and
On the Truth Social?
on Truth Social. And when he says something that might be newsy as a presidential candidate, I'm sure it would, certainly the coverage would pick up if he does become president. Some journalist is going to take a screen grab and they're going to tweet it.
They're
They're
gonna
going to put it right on Twitter. So, unless it matters that you see every single one of the things that he posts. And by the way, there are feeds on X and on Twitter that just, use an algorithm to populate, whatever he says. Unless you absolutely need to get that, primary experience in real time, I don't know if it's necessarily going to attract much more attention. I mean, they get exposure probably because, the CNN reporter is going to have to talk about it, every night. But that doesn't mean you have to actually be on the app.
I like what you said there. If there's anything worth knowing about that's happening on the Truth Social, someone's going to tweet about it on Twitter where we are. I feel the same thing about financial television. Like probably once a quarter, there's something that's worth watching on financial television, right? Maybe once a month, right? Almost never.
Absolutely.
Actually interesting. It's going to make its way to Twitter, right? Like what was funny that one time where like the little kid is crawling into the room and is getting dragged out, right? Like I didn't have to be there live watching it. I got to see it afterwards and laugh. Like that was hilarious. So
Right.
we got it on Twitter. The Ackman and the Carl Icahn, used to get picked on in the playground, like all that stuff. Like again, it was on Twitter. They wrote a book about it, right? Like there was plenty of time to watch it afterwards. So like these are only a few of the actual quality things that you see on basic cable, and it's going to make its way on Twitter if I need to see it. Right?
I'll take that even a step further. It's not even just about financial news, but you can say that about financial information and economic data and everything that, people like us are, looking at all day long. Like you don't give your subscribers and your clients, unfiltered, uncurated feeds of all the stuff you look at all day long. Part of the value that guys like us offer to people who pay attention to us is, we provide some curation. We spend all that time looking at the charts and the data. Yeah. And then, like for me, like once a week, I'll give them a roundup of 15 or 16 charts that they need to look at. And they can look at it in 2 minutes, as opposed to being up every morning and watching, economic data releases in real time.
All right, let's talk about that. Sam, I like you had a post, I don't know, 2 weeks ago, I don't remember now, about how narratives change, right? But the market just kind of keeps on doing what it's doing, right? I mean, obviously we're not really going up right now. We've been talking about that, but narratives change all the time. Elaborate more on that idea, on how there's this, like, we talk about rotation in markets, but there's also rotation in narratives, right?
Sure. Yeah, like speaking of financial television, what have we been hearing about for the last couple of months, or maybe even the last year or two, is I think there have been at least two big narratives that we hear about that sort of shape how we think about, or at least the news coverage of financial market movements of every day. First of all, Mag 7, mega cap tech stocks. They're driving all the earnings growth and they're responsible for all the returns in the stock market. Great. And then, that inevitably leads to a kind of a logical jump, which, is probably faulty, is, well, what happens if these Mag 7 stocks start to lag? And then, people's brains start to fill in the gaps, and then they think that the whole stock market is supposed to fall apart, but that, hasn't been happening. The other, and we can come back to this. The other big narrative being that, probably since, sometime in late last year or mid last year, there's been this story that, oh my God, the Fed is pivoting, the Fed is becoming more dovish, and then there's a setup for rate cuts down the road from the Fed, and that's got to be ultra bullish. And so it leads to people asking questions and, again, making these faulty logical jumps that, well, if rate cuts are supposed to be bullish, then therefore, if we don't get rate cuts, or if the odds of rate cuts go down, or we get fewer rate cuts than we thought of, last year, then that's got to be bearish. Sorry, it's just not. It just doesn't work that way. Like the narrative driving markets, it doesn't matter if you agree whether or not those were true, to begin with, that they were indeed driving markets. But what happens is these things that drove markets higher, they can fade, but that it doesn't necessarily have to bring the entire market down with them. Some other story will emerge, and that becomes the new dominant narrative in the market.
So,
as somebody who follows the narratives, sorry, Spencer. Spencer's got like a man crush on Sam Rowe because you guys like are
what?
media first, Spencer, you guys two, what is it? Birds of a feather, one of those kind of things, right? Sam's got one foot in each side, right? Sam's got the media and the finance, right? Sam's a CFA. Spencer's got the media, learning technical analysis, right? Thinks he's a fundamental analyst. I see you, dog. I see you. No, so my question to you is, how do you think about that? Like, as a CFA, fundamental analyst, but you're aware of trends and whatnot. How do you think about like the narrative? You were talking about the narrative changing and things like that, and then what the market is pricing in or not. Are you looking for like dislocations in the narrative versus reality and stuff like that? How do you think about that?
Yeah, for sure. And thanks for bringing up the CFA. I usually don't like to bring that up, but if someone else is going to do it, that's great. But that, it speaks to how I sort of think about markets and market coverage. I'm old school, fundamental, bottom up guy.
TradFi, bro.
Yeah, I'm totally hardcore TradFi, and that also implies sort of longer term time horizons and stuff like this. But at the end of the day, every narrative boils down to one thing. From the perspective of investors in the stock market, it always boils down to one thing, and it boils down to earnings. It's like, what's the story for earnings? Because if the narrative for earnings growth continues, if that persists, if narratives change, if the macro narrative changes, but the earnings story is still intact, then it's got to be favorable for stocks, in the intermediate term or the long run. So that's mostly how I, think about all this stuff. Sure, like there might be other things that, drive price movements, in shorter term periods. But the thing that's always, held true, and the thing that has the tightest, as far as I can tell, the tightest relationship with stock prices over longer term periods of time is the direction of earnings. So that's sort of where everything sort of gets back to it. And I think that actually speaks to, these changing narratives, right? Like, why is it that the rate cut story is fading? It's not because the Fed is just suddenly hawkish for no reason. It's because the economic data has been stronger than expected.
It's not because interest rates go up every day all year. That you don't think it's that? That doesn't have anything to do with it?
Well, I mean, there's an inflation story there. There's an interest rate story there. But at the end of the day, it's all that stuff is sort of goes back. I mean, like the interest rate and the inflation story, I think, is also tied to economic activity. And, how bad is that? Right? Like I think if we had disappointing economic data and we had really high inflation or persistent inflation and we had higher interest rates, then yeah, that would be a really big problem, because that again becomes a headwind to earnings. But no, we have better than expected economic growth. We have better than expected job growth. We have better than expected personal consumption. And then, already. I mean, we're early into earnings season, but 80% of companies are beating expectations, and it's reinforcing this idea that we're going to get double-digit earnings growth this year, and even
when did earnings season start officially?
I mean, I don't know if they have an official, but people say it kicks off with bank earnings.
Friday? Yeah, last Friday.
Yeah.
So last Friday. So earnings season kicks off with bank earnings, and you're saying that 80% of companies are beating, yet the financials index is down literally every single day since earnings season started, according to you guys?
I mean, listen, I usually write and think about stuff from like the S&P index level. So I mean, like again, this is another one of those narrative stories, right? Like there will be times when some sectors lead and there will be times when some sectors lag. And financials, unfortunately, but this was also sort of expected going into earnings season, financials were supposed to be laggards from an earnings perspective. So I do think, though, JC, that you bring up a good point. It's this question of what might actually be priced in. And it also happens to be the case that historically, most company beat expectations for earnings. So when you do hear about 80% of companies beating expectations,
well, what's the
that
average?
might have actually been the
What's
expectation.
the average, like 75 or something like that?
Are the companies beating expectations, or are the analysts just missing?
Doesn't matter.
It's a combination of
matter?
both, right? I mean, this is Morgan Housel writes about this, that he'll tell you that, yeah, exactly what you said. It's not the companies missing expectations, it's the analysts missing the estimates.
See why I love Morgan Housel so much? He just agrees with me, Big Morgan Housel.
No,
fan, right?
Sam, what's the average on that? It's 75% of the time companies beat, something like that, right?
Yeah, I think it's around 75% of the time. Like if you go back to like the last 10 years, there's never been a quarter where fewer than 60% of companies have beat expectations. And the median beat margin is about 5%. And this is like it's so stupid, but it's one of the most consistent patterns in history. And we can get into like why that might happen, but again, it's not as simple as the earnings. The analysts aren't great at forecasting earnings. Which, by the way, if you're only missing by a margin of 5%, that's pretty incredible. That's pretty tight, and I would argue that they are actually very accurate. But the fact that analysts' estimates tend to be below the actual results, that could speak to a number of things.
Right.
There are investor relations people at all these companies all day long talking to analysts, trying to get those numbers down so that they can beat them. Analysts are also under tremendous pressure to not create a situation that might, hurt, lose favor with the executives that they have to talk to when they model their numbers and stuff.
The blockchain fixes all of this.
Wait, but going back to the point about the narratives, though, Sam, isn't it also funny how much price can drive it? Like someone in the chat just mentioned AI.
For sure.
I haven't heard a lot about AI the past couple weeks, right?
Those stocks suck.
Right.
Yeah, I mean, like, listen, the market will be up today, and that's going to be on fading fears of inflation and
Right.
optimism for AI, and the market will be down tomorrow, and then people say fading optimism for AI and concerns about inflation resurface. So yeah, you're absolutely right. I think the market will also sort of drive those collective narratives.
Yeah,
Narratives are hilarious. Sam, let's get back to the media. I really love your thoughts on social and kind of the how they dance with finance and everything. Read a study that over 30% of investors get their financial information from YouTube. It's a lot. That's higher than I would have thought.
Yeah, I don't get my financial information from YouTube. I will tell you that there's a lot of really good information on YouTube, and there's a lot of really bad information on YouTube. So, I think this is really difficult to track exactly how to measure the quality of that information. I listen.
You do it yourself because you've been around the block, right? So it's not information overload; it's filter failure. Right. And my suspicion is you're pretty good at filtering this stuff out. you might even watch some of the bad stuff just so you can see how bad it is. You
Oh,
know?
absolutely. I mean, listen, I'm on, I don't spend a lot of time on YouTube, but don't tell anybody and don't tell my boss, but I spend so much, I spend an unbelievable amount of time on TikTok. And I can tell you that there are a lot of people with a lot of really compelling stories to tell. And oftentimes, that'll be part of how they sell incredibly shitty financial information. And
I think I saw you the other day. You were dancing, right? It was you and a couple of your girlfriends. You guys were dancing in the TikTok.
Well, we're getting off topic now, but the point being that
no, that wasn't me. Pay no attention to that.
the barriers to entry to get into the financial influencer, any influencer business is so low right now. I mean, listen, I would, the barriers to entry to start a newsletter and go independent, are so low, and the costs are so low that even someone like me can go out and, break away from a media company and go on my own. But yeah, I think, things will become increasingly treacherous, in terms of people, fielding information, because there's just so much out there and it's incredibly difficult to vet it. And, even worse, some of these people are so great at packaging their content to make it look like, it's a really high quality studio, or, there's this, I mean, this is maybe the last thing I'll say about all this. There is this trick that's happening right now where, so-called influencer, I mean, they're actually literally not influencers, fraudsters, will create this idea that they are a guest on someone else's podcast, where they might be a guest on the Joe Rogan podcast, where they'll put the Joe Rogan background behind them, and they're speaking into a mic as if they're responding to a question, right? Because of course, it's one thing if a person is looking directly at the camera and says something about how you should be putting all your money into, an IRA. But if you look off to the side and it sounds like someone's asking you, it implies that you must be an expert, right? So people will talk to blank walls and do their videos like this because it gives this illusion that they are an expert. But yeah, no, it's scary. It's a big, gigantic mess. I think I think it's sort of like there'll be a really bad period, and then maybe there's a better period out of this. I think people will find themselves going in really bad directions, making really poor decisions. There might be a lot of distrust that's garnered from all this, but I think the pendulum eventually does swing back, and people will say, "Hey, listen, you seem to be more knowledgeable about this. You seem to be getting better information, whether they're talking to their neighbors or their friends or whatever." And I think eventually the higher quality YouTube channels, TikTokers, podcasts, stock market TV shows will rise above this, and they'll eventually get more attention, because there's just so much bad content out there.
I'm glad you brought up the pendulum. Sorry, Spencer. I'm just,
right.
Spencer wants to ask. Spencer's like, this is one of my
Well,
guys.
no, I had a thought. I had a response to that, but yeah, okay.
Oh, go ahead, Spencer.
Well, I was going to say, I don't know who came up with the saying, the packaging is as important as the product, or the packaging is the product, right? But that nowhere is that more epitomized than on YouTube, right? If you've got a fun thumbnail with someone going, right, with crazy arrows and stock market crash. Stock market crash is trending on Twitter every day, by the way. But stock market crash and gold this and yeah, and
you thumbnail on fire.
There are things, and I know these tricks too. I know all the tricks, and you can game the algorithm. The algorithm is on YouTube, especially, is designed to be gamed, and you can game it, and everyone does it, right? Everyone does it.
Yeah, and so that's a big challenge for us. It's like, at one point you make a decision as to how you think about competing in this environment, because at the end of the day, we're all dealing with people, right? And so how are you going to get attention? How are you going to draw attention away from these people? And there are a lot of media companies, or I don't want to say that too generically, that'll go down that path, and they're like, we got to crank up, turn the dial up on the headline. We got to turn the dial up on the images and really exaggerate what's going on. One thing, that I can, appreciate from my Business Insider days working with people like Joe Weisenthal, who understood that, this was sort of the nature of the information consuming environment. How do you balance, really great financial information and good news, and communicate that in a way where there's an appropriate amount of urgency being communicated in your headline and your image and all that stuff. So yeah, like, listen, we all have to evolve, right? Like, how do we keep our stuff interesting for people? Because the one thing that we have above as an advantage against a lot of this crap is maybe we're providing better information.
And this is where
I
actually
can tell you that for a fact.
I want to give you guys props. You guys are doing something pretty interesting with the whole Sherwood thing on Robinhood. You guys have rethought, the front page, the homepage, so to speak, right? And you've rethought the idea of like I've noticed you guys do a lot of linking out to other places, right? So I dig it. You guys have rethought like the whole idea of headline, article, front, top. It's different. So I'm digging it so far.
Yeah. So just real quick background. Yeah. So I've been doing. I've been working with Sherwood Media, the new media arm of Robinhood, as a consultant to help sort of tweak how they present information and stuff like that. And yeah, I think that's a good point. Like stuff like being able to link out to stories and news coverage that's happening at other places, is a great way to provide value to your audience and your reader.
That's how this started, Sam. That's what we used to do back in the day.
Yeah, great curation. Remember? And you don't have to spend all day re-aggregating someone else's reporting when you can just link right back out to them. Or like again, like there's this whole repackaging kind of a feature where it's like, how can we like we there are a lot of people on the team who can signal to the audience that, listen, we are reading the papers for you, and like here are things that we think that actually matter and are interesting. And so maybe there's a place on Sherwood that communicates that for people. And then on top of that, they're doing incredible original features, like the team that they hired and the writers on Snacks are incredible, and they just have like all these incredible ideas for features and interesting stories about business that unfortunately sometimes get overlooked because it's not about how the world is coming to an end.
Yeah, and I've noticed over the years, whether it's someone like Tadaz, who, kind of aggregates all this, just has been doing it forever, or maybe someone like Barry Ritholtz, who does like a weekly post where he puts some links, or someone like Josh Brown, or something like the Chart Report. What I've noticed is that when you link out, you get a ton of engagement, a ton of clicks on those links for sure. And you're also, I don't want to say like making a friend, but you're giving somebody props, right? You're sending love in a different direction that ultimately comes back also. But so I think that's a great point. But I wanted to mention something. You talked about the pendulum swinging, right? And how, these days you don't need some producer on some TV to tell you that you're good enough to go on and talk to an audience. You could just create a video and talk to an audience, right? There's no like that barrier of entry where someone who may or may not know any better is making the decisions of who's providing quality and who isn't, right? There's no gatekeeper, right? Technology and social and the communities that have been built around the world have eliminated those gatekeepers. Do you think that there's ever going to be a time where we're reverting towards that again? Like we're going back towards the gatekeepers, or is that gone forever? And those traditional media companies are just going to keep losing until they're gone forever? Or do you think that there's something possible that can happen to change that trend back the other direction?
I think there'll probably be something in the middle. I can't really quite articulate why I believe this, but I do think that you'll probably be able to count them on your hand, like a handful of authoritative big names that'll just always exist because people like the brand and how information is packaged by them.
You don't have that now, though, Sam? Isn't that what it is? Basically, a handful of names that are left.
Yeah, but I think it's
Bloomberg,
a question.
Fox, CNBC, CNN.
Yeah, but here's the thing. I think they'll still exist,
Cheddar.
but I think their share of the pie will continue to shrink. And it's the reason why you continue to see so many layoffs at even these big, gigantic names that you thought would never fail. It's like even just last week, Wall Street Journal had a massive amount of layoffs, and this is a company that's making a ton of money on subscriptions, right? Like, here's the thing: it's like whether it's the crappy creator on YouTube or smaller independent upstarts that are really great at targeting an audience, and I think this is the core to this challenge, and the opportunity, by the way, in financial media is the ability to have, whether it's you, me, the next person who comes up who's the great finance creator, is the ability for people to have very unique voices with very targeted content. And maybe the size of your TAM, your audience, is not 100 million, but maybe your target audience size is a couple 100,000 or maybe 10,000, and you can have a viable business by having 10,000 subscribers or 100,000 subscribers. Now, if you start having hundreds and thousands of creators going after audiences this small, that starts to eat away at these big players who are trying to be everything to everyone. Because as a saying goes, if you try to be everything to everyone, you're nothing to no one, right? So I think eventually at the margin, all these big players are going to start losing a lot of audience because they're going to find a better experience somewhere else that with creators who actually speak directly to them, as opposed to these big companies that are speaking at them.
It's such a great point. I remember when I didn't know any better and I would watch basic cable television to get my financial information. It would be like boring, boring, boring. Ooh, Luis Yamada's on. Turn it up. Boring, 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 boring. Ooh, Ralph Acampaura's on. Turn it up. Boring, 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 right? Like there was like a few people who I was actually generally interested in hearing from. And then 98% of the rest was just horrible. So I love what you said, that it's more targeted. If you're into people like Luis Yamada and Ralph Acampora and Jeff DeGraff, like I am, like there are places where you can find them. Jeff DeGraff has his own podcast. Luis Yamada, bless her heart, probably doesn't know how to do that, but she comes on our show every now and then, right? Like, you know.
And listen, Jeff DeGraff is never going to become the Wall Street Journal. And, I got really bad news for you guys. You're not going to become the Wall Street Journal. You're not going to go after 100 million people.
You take that as good news, Sam?
Yeah. No, I agree. Like, listen, I personally want to be able to provide something really great for an audience. And frankly, like the whole reason or the whole design of what I'm doing with my newsletter is because I'm writing the newsletter that I want to read.
Right.
And so apparently there are some other people who are into it, and some people are willing to subscribe, and some people are willing to pay up for, the premium subscription. But, I'm realistic with myself, and like I actively know that I'm not going to become, CNBC, because, again, I don't want to become that, and I don't want to, serve that audience.
I know the audience doesn't want you to be that either, by the way.
Well, also, therein lies the secret of both you guys. The content you put out and you share it publicly, sure, but like you're also doing it for yourself because you want to, and you need it, right? And that's so
true, Spencer. So
right?
true.
Like that's what you'll be doing it anyway. You might as well share it, people, right?
Yeah.
So,
it's a very selfish endeavor.
Exactly. Yeah. It's one of the, I consider myself incredibly lucky that, I'm able to, monetize something that I would have been doing for free or that I would have been paying for. Right. Like so much, again, like a lot of the stuff I do, like, especially on Sundays when it comes to these roundups of these macro charts, for the most part, it's just because it helps me keep track of, these stories that I want to write about. So, if I'm already doing this work, it takes me an extra 30 seconds to put it into a newsletter. And then it turns out, someone else is also benefiting from that work I've done.
Yeah, totally. Stay true to yourself and the audience will come, because as it turns out, and I'm sure you've experienced the same thing, for me, the things that I think are cool, the tools that I think are valuable, the strategies that I think are interesting, as it turns out, a lot of people agree with me. Some don't. Some call me terrible things.
Yep.
But a lot of people really do agree with me, and that's great. And those are the only people that matter as far as I'm concerned.
Yeah, I agree. And listen, people will say terrible things about anybody all the time. And, sometimes that's a really good sign of things. As long as they're not pointing out like factual errors,
Yeah.
I take any kind of feedback as positive. It's
Agreed.
not until like I start screwing up the theory that I know I'm in trouble. But if people think I'm full of shit because, my view or my sort of curation of the news, doesn't fall in line with, how they think about things, that's totally fine.
If no one's hating, it's because nobody cares.
Exactly.
So you need a hater.
All right,
Thank
guys.
you so much, Sam.
Check out Sam's Substack. The link is in the description. It's on the screen right now. It's TKer.co. Does great work as always, and it's always a pleasure to talk to Sam.
Thanks for having me on.
Thanks a lot, man.
Thanks, Sam.
All right, he's great. And yeah, he does sort of straddle that world of media and finance, which is why I'm a fan. All right, it's 9:30.
Sam Rowe, OG Sam Rowe.
Yeah.
I don't remember Sam Rowe not being around.
Yeah.
OG.
Okay, down 32 here. Let's take a quick stock of things. We didn't talk about really any earnings at all today. We had a couple interesting ones. We had United Airlines come in with a good report. They're up 8%, 7.5% now this morning. We had JB Hunt come in with a weak report. They're down 8%. ASML had a light report. They're down. JC, you want to give us a quick overview of where things stand as we get started here?
Dow futures are up 130 points. It's about 1/3%, 38,170 on the Dow Jones Industrial Average. S&P futures up 22 handles, about 40 basis points. NASDAQ futures up 1/3%, up about 60 points. U.S. Treasury bond futures somehow not down, actually up about 1/3%, hanging around 114.5. Gold flat at 2,400. Silver up 1.5%. Again, gold flat, silver up 1.5%. Really interesting. Copper also up 1.5% at 437 for copper, 28.80 for silver. Making moves. Dollar slightly down this morning. Not a big move there. Volatility index hanging out near 18 as that remains elevated. Highest volatility that we've seen since early in the fourth quarter last year, if my calculations are correct.
For what?
And
Highest volatility for what?
the S&P 500.
Oh, wow.
Since I'll tell you exactly.
You're talking
Highest volatility for the S&P 500 since Halloween.
Yeah. A lot of things first time since Halloween. We're saying that a lot. Lowest reading since October.
A lot of lowest readings since November too, but yes, or highest readings in the case of percentage of stocks not above their 50-day moving average. We're seeing the highest readings since then. Right?
I got some charts.
I'm sure you do. Can we just talk about Sam Rowe? I mean, he's the man, dude. I mean, I feel like I say that a lot of guests a lot. He's like the man in different ways than maybe other people, right? That we have on. Brings a great perspective. He's good at things that I'm not good at. And then, he's good at things that I am good at too. So we speak the similar language. Friends with a lot of the same people, right?
New York guy.
All right, Steve, what do you got?
All right, Fonz, you ready?
This is what Steve's been cooking up in the background in the last few minutes.
I got a real treat for everybody here today. No, forget this one. This is for later. Just go right to the cards. Yeah. All right. So, JC, is it a bull market?
Yes.
Tech stocks.
I think so. I mean, we don't know until afterwards, but it seems to me like we've been in one. No evidence that we're not in one.
Yes or no question. Mega cap tech growth, big caps, that trade, has that been leadership this cycle?
It was the leadership last year. It wasn't the early leaders. The cyclical stuff were the early leaders in the back half of 22.
Have tech stocks been a leadership group this cycle?
As they almost always are in bull markets. This time was no different.
There was a wide performance gap last year, but nonetheless.
What do you mean? What does that mean, a wide performance gap?
Where big cap tech just crushed most.
No, I know, but when you study every bull market going back 100 years, almost every single time technology was an outperformer. I
mean, we had like a flat Russell 2000 and NASDAQ up 50%. Is all I'm saying. That's not the most
Are we
common.
talking about the Russell 2000 where that one stock in the
Whatever.
tech index is bigger than the entire Russell 2000? That Russell 2000 is the one you're telling me about?
Erroneous. It's aside from the point. You can buy pullbacks in the context of primary uptrends. In fact, buying weakness in bull markets is a fantastic strategy for people with longer time frames. I want to bring a couple charts along. They all have a few things in common. Completed bases, right? I would call all of these cycle leaders, right? Upward sloping 200-day moving averages, which just confirms for us, and it's an illustration that the primary trend is undeniably higher in all these. Bullish momentum regimes in the lower pane and the daily RSI 14, showing us that buyers remain in control and have been in control of these assets for a long time now. And very clear, clean polarity levels to get long against. So taking it from the top, we have AMD, top semiconductor name. Start with AMD. Yep. Short-term top for sure. But patterns like this fail more often than they complete and are valid during bull markets. Right? So you could bet on these short-term tops failing here against the prior cycle highs. Next is CrowdStrike. This is a cyber leader. These are all stocks well above or close to at least $100 billion. They're all sizable names. I don't know about CrowdStrike now. Google. Everybody knows Google. Breaking out in a tough tape. Amazon looks like it's close. Taiwan Semi, super actionable at these levels also. Taiwan
Google
Semi.
breaking out in a tough tape is a little aggressive, but okay.
Did Google not break out?
Did it?
Throw back the Google chart. I don't know. Everybody can decide for themselves. That
Maybe.
looks pretty good to me.
I mean, I guess.
Want to see
We'll
an
see.
overall momentum reading, but yeah.
Are breakouts failing left and right out of curiosity?
Some are, not the charts I'm showing you. You can also find even stronger charts that have completed bases like this, hit some of their first targets, and are now coiling. Or maybe not hit their first targets, but are above the prior cycle highs. I brought these along because they're just so perfectly defined at the prior cycle highs. That's such a good line in the sand. Some of these names are so close to it. You could lose $1 if you're wrong, right? You lose a couple percent, maybe. And you're buying weakness. You're buying just really clean and clear support zones, or at least potential support zones in a bull market. And some of the strongest names, CrowdStrike, Google,
Good.
AMD. These are the names that people were dying to get into just last year. All I'm saying, you got some really, clean charts here, clear levels to get long.
Look, if you liked AMD at 220,
That's right.
You love it at 160.
Throw up Intuitive Surgical too. I just thought this was fun. This is a healthcare name, medical devices, but again, big cap growth trade.
Yeah.
Right. So there's just a lot of stuff that looks like this, and I think maybe not right now on a down day. Wait for some sort of tradable low, or at least a green candle. But I think eventually you're going to want to go shopping in some of these early leaders.
How about this? I agree with that.
I know you do.
I agree with it. Eventually, we want to go shopping in early leaders. But you know what we're doing today? We're making it rain. Calls and puts, baby. Making it rain.
I think you could do both. I'm doing both. It's a bull market. So I think,
It's a bull market. It's a bull market from a longer term structural perspective, but short term is
That's the point. That's what Steve said. He said for people, specifically for people with longer time horizons.
Yeah, I'm agreeing with that.
Yeah.
listen,
I still think it's the time to be making it rain calls and puts, though.
why can't you do both? Why aren't you doing both?
Because I just want to make it rain right now.
Okay. Right. Great. Throw up Bitcoin.
I have it because you know why? I'll tell you why. I have enough in my long-term shit. Right.
Yeah,
So I'm just focused on the now. So I don't need to be adding to my long-term stuff. Like I'm good there. So for right now, I'm just going to be selling. Make it rain.
You can wait for confirmation, which would be the resolution of this coil.
All I know is that patience over the last 10 weeks has paid off handsomely for me.
Okay.
Handsomely.
Sure.
Not chasing this nonsense has worked out so well. It's helped me sleep better at night. I haven't lost any. There's been no opportunity cost. It's been a lovely experience.
On Hot Corner the last few weeks, we've barely brought any new long charts because we've just been sitting on our hands. So fine, but listen, it's been a couple weeks already. You're going to want to start making it rain longs soon too, I think. And Bitcoin.
I hope you're right. It's just not today.
Bitcoin's probably going to be one of them. You could wait for this coil to resolve, but this is a chart that we're buying all day. So important context, just zooming out on some of these charts. They are very clean. Yes, I think the big theme right now is overhead supply. It's everywhere you look, but the names that can clear that overhead supply early, ahead of the indexes, ahead of the broader market, look for them to lead out of the gates when this corrective action is over. So I think you want to make a shopping list right now. Here are some names that are on mine.
I couldn't agree more with that. Look at us.
That feels good. That feels too good.
I couldn't agree more with that.
Yeah.
Now I'm going to go make it rain all day. What do you want from me? You know,
I want earnings is what I want.
Talk to me, Spencer.
Well, let's bring on this UAL, right? And then we'll bring Mariano afterwards. But we had UAL out. Always important to look at how a company performs compared to its peers who have already reported. We had Delta late last week. Their numbers were good. United, same story. It's a top line beat. It's a bottom line beat. They reaffirmed their prior guidance. As I mentioned, we're up. Oh, now we're up 10% today. So continuing to see.
I thought they got a little guidey boost. No.
Oh well, you know what it was? It was I don't know. The estimate.
I'm only looking at headline.
The estimate was like at the lower end of the range that they gave. So the range that they gave was disproportionately higher to the estimate, if that makes sense. And so yeah, I guess that counts as like a good guidance print. But the bottom line is you're continuing to see, at least fundamentally, a rebound in airline activity, flying activity. So what Delta said, what United has said. That's two.
Delta's chart looks a lot better than its peers. And
yes, it does. It's up. It's right up near the top there of the range.
Not uncommon either.
No.
Can I just tell you that I had a lovely experience on Delta last week?
They're good.
I hadn't flown Delta in maybe 20 years.
All of our airline options domestically are terrible. Delta's the best.
I had a lovely experience with Delta. I haven't said anything positive about an airline or airplanes in a long time. What a lovely experience I had. Just
what made you say that specifically?
What
happened?
Just friendly service, no issues, clean planes, Wi-Fi.
Champagne was good.
No, I don't really like to order champagne on the on airplanes. I'm a little too bougie for that sort of thing. I like where your head's at, though. I appreciate that. No, I'm not a big drinker on the airplanes.
Me neither.
I feel like when I was younger, I would do that. Now that I sit first class and they give it to me for free, I don't want it. Isn't that funny how that works?
Well, also, you can work in first class. When you're sitting coach, it's like you can't even take your laptop out. So I think sitting there and drinking is one of the only good options.
I don't know what that feels like.
All right. If you thought airlines rebounding, booming economy, I would introduce JB Hunt as a counter argument to that booming economy thought process.
Wow.
Transportation, trucking, both
can
the
you throw up
EPS.
slide 2 so you can show the Dow Jones transportation average down another % today, down to the lowest level since November?
Yeah, both of JB Hunt's top line, bottom line came in below estimates yesterday after close.
Tranny's down another % today, dude.
Yeah, JB Hunt down 8%.
This Trump meme coin is really messing up my flow here. I'm used to being able to just punch in tickers and move, right? But now when I
feel your pain. It's like when
right?
I look for Deutsche Bank, but I get butter futures.
Yeah.
That's really annoying too.
Yeah, you feel me. All right.
Yeah, this is real first world charting problems right here.
Jeez Louise.
He had to take the Dow's ticker, huh?
Well, not every charting platform uses DJT as the transport. Some use Tran. A lot use Tran.
Right? Or some use like $ DJT.
I'll just say on this, so they're doing like a raise or something. And this has been a shit show. I'm barely paying attention, but reportedly Trump is making out like a bandit on this. He's
What, did
making
they just
so
issue
much
the
money.
secondary?
Billions of dollars. Yeah.
Yeah, he owns a lot of it.
60%? Is it?
Yeah.
40,
Yeah.
60?
Anyway, back to the transports. As we were saying, JB Hunt down today, no bueno. Transports as a group down again.
Historically speaking, when one of these Dow index is going up and the other one isn't, how does that usually work out for stocks afterwards?
You've been saying that for a while. So is it finally
And
happening?
has the market continued to deteriorate or has it improved?
Again, the major averages have been falling for days.
Dow is flat for the year. You want to put that 0.0 there, Spencer? Flat
No.
for the year. World's most important stock market index. Hasn't got anywhere this year.
The NASDAQ 100 closed last week like a percentage off all-time highs.
The NASDAQ composite closed at an all-time high on Thursday. There just weren't any stocks in the NASDAQ that made new highs.
Yeah, strange, huh?
It's not strange. That's what happens in a week tape.
It's a bad index, though.
Because there's so much shit in it. But still,
It's crap.
fine.
No,
But even the quality ones weren't able to make new highs. To be fair, the NASDAQ composite is not all crap. There's plenty of crap, but there's actual quality in there. And those didn't make new highs either. So it's not like you could say, oh, the quality ones are working, but the crap isn't. The quality and the crap, neither have been working.
yeah.
Okay.
Yeah.
What do you got, Spencer?
Couple more things I want to bring Mary on. I just wanted to mention Autodesk delayed their 10K filing, doing an internal
Yes.
report on their financials and not ready yet. So 10K
So-
filing delays, especially for the annual report, never
No.
great.
Very bad. So this is audit related,
Yeah.
which is
Yeah.
never good. It's why the stock looks the way it does. Apparently, they dropped an 8K explaining it. Further delay its 10K due to an ongoing internal investigation of its board of directors. So I don't know if that's audit committee board of directors. Investigating cash flow and margin practices. There's an accounting probe. So these words and phrases are just never good. So this one back in the box. Hate to
Yep.
see it. You can't
Right.
you can't own stuff like this.
And then a couple more quickly. Exhibit 572 as to why merger arbitrage can be incredibly difficult. Capri Holdings, CPRI, which has been
That's
is
one
go-
of the brands, one of the luxury brands. No,
yes. And they've been Capri's is Michael Kors, right? And Tapestry, which owns Coach, has been trying to buy Capri for a little while now.
forever.
And the New York Times reported that the FTC is preparing to sue to block this acquisition. So CPRI down on that, and not great. Last thing, Eli Lilly, their weight loss drug showed good results in patients with sleep apnea. So what can't these weight loss drugs do? I don't know, but that was interesting. Okay, you want to bring Mary on?
Please.
Mornings with Mary. Let's go.
Hey, Mary.
Good morning, gentlemen.
Hey,
How we doing?
Oh,
Pretty
no
good.
complaints,
Getting ready for the conference call, yeah?
It's my favorite time of the month, Mary.
I'm very excited. Very excited about. Do you have a sneak peek of anything? Give us a little sneak peek.
You're in the Slack. You know what
Yeah.
we're going to be talking about. I want to just remind everybody. Mary brings a very unique perspective. Mary, is our head concierge, our chief
Of all things.
communications officer. So Mary speaks with all of our customers all over the world. Mary also consumes more All-Star Charts research than anyone in the world. So her perspective is very unique, very different than mine or Strazza's. At this point, we're super jaded. Mary, unjaded, coming in hot. What do you like?
This is a bit out of the box. I took this to the analyst team yesterday. I'd be curious to get Steve's take on this too. But yesterday I was looking at everything on my watch list, and the one thing that stood out, ironically, was coal. And so BTU, AMR, Arch, all up 5 to 7% yesterday. Caught my attention. And so, ask the analyst team about, what are your thoughts about coal here? Just because, I pulled up my charts and I've got a VWAP anchored to the March 2023 lows. And every time these prices check back in, it's been a great buying opportunity. And so I really kind of pinpointed Ian. I'm like, Ian, what do you think? So I'm curious to know what you guys think on coal long term, right here. I'm just curious because, the charts look decent, especially Arch, above 183-ish. Then we've got kind of a nice level there
I think you sell the wings, Mary.
Yeah, you've done better work, Mary. These
Sell
are
the wings. You could sell on the Arch in particular.
Yeah.
Right.
Okay.
You could sell the 150 puts, and you could probably sell the 180 calls, maybe 185 calls. We'll talk to Sean about it in the meeting today.
Right.
I actually really like this trade. Actually, putting on a,
Getting fancy.
it's an individual stock, so we'll buy. So, like for example, and I need to talk to Sean about this because he gives me permission to do things. There might be earnings involved. Like there's other things that Sean brings to the table here, but just at first glance, assuming that there's no obstacles in our way, which there usually are, but let's say there aren't, what I would do is I would sell the June 150 puts and then buy maybe either the 145 puts or the 140 puts, depending on what Sean likes. And then I would sell the 185 calls and maybe buy the 190s or 195 calls to hedge that out. That I think is the money trade for this particular stock. Sell the wings, hedge yourself out on the backside.
I hear you about the VWAP though. Let me just throw this up quick.
Yeah, Fonzo's having trouble with his Optima. Couldn't help me out. I got a little late to him this morning.
Yeah, his Optima's frozen. That happens.
Yeah.
It's just crushing data. So it's just a range is the problem, but throw up BT.
It is.
So what's rangy about this? The 200-day, if I had it on there, would be dead sideways, like just beneath current levels. But anywhere you drop a VWAP, did you get it, Fonz or Spencer? Can you just toss it up? I just
BTU
morning show chat.
What a mess.
Anywhere you anchor a VWAP from over the past several years, right? You could do key peaks and troughs. So April 2022 high, you could do the July 2022 low, you could do the November, December 2022 high, you could do the 2023 low. They're all converging right at the current level. Mm-hmm. Problem is we've faked out twice already. We've taken out that cluster, fallen back, taken it out, fallen back. So again, it's just choppy, it's messy, and the RSI speaks to that also. While it looks like it's barely a bullish momentum regime, it can barely get overbought. So while it's not getting oversold, hasn't been oversold since Q2 of last year, it's also not getting overbought. So this is just like the rangiest kind of technicals you could find. I think you would want to wait at least till we're above the pivot highs. Arch is a little bit cleaner. At least Arch, I think we could buy this on strength, and we're close to a resolution. Let's throw up the Arch chart quick. Like we're what, a couple points away, right? In Arch, what would those old highs be?
I think it's around 183.
I do like that. I think coal comes back.
187.
I think you're looking in the right place with coal.
Well, like I said, I've been kind of sitting on my hands like you guys, just kind of waiting, biding my time for better setups, just because so much has been failing, setting up and then failing. And this was what stuck out to me yesterday. I had a lot of red on my screen, but then, it was noticeable, this move in coal that happened yesterday. And so it caught my attention and thought I'd chat with you guys about it.
Yeah, you get bored sitting on your hands for too long.
And, that's to JC's point. When I first started trading, I got chopped up, choppy mess. And I said, never again. And so when I feel like I'm just having to look hard for trades, that's when I say, okay, my position is going to be no position right now and wait for the trades to come to me. There's going to be a better time to trade. Let's save the money that's been made because we've made some great money.
You guys hear this?
The last several quarters.
You guys listening out there? Are you listening to Mary? This is so wise, Mary. Good on you. Good on you, Mary.
Thank you.
You don't sound like a new trader, Mary.
Well, yeah, I learned from the best, you guys. I've been hanging around you guys for a few years, and you saved me from myself a number of times. And learning from the best. So Plus that CMT curriculum. It's all about risk management, right?
Ah, girl, I love it. I love it. Dawson's a little heartbroken. We haven't talked about the Geo Bowden. Throw up slide 2 there quickly before we go to recess. So this is the Geo Bowden now pushing $500 million in market capitalization as the meme coin craze continues. It looks like a stair step higher to me, Strazza.
Just crazy.
Stair step higher. What do you think, Dawson? Are you in? Are you in on the Geo Bowden? Betting for a run to a milli, to a Billy?
Holding up really well.
Holding up relatively well, all things considered. Yeah, definitely. I mean, listen, meme coins in general, Geo Bowden, certainly one of the best ones. Some of the others not holding up as well.
I was just going to say the Book of Meme, the Bonk, not so good. Not so good.
Not as bad as you would think, though. Not as bad as you would think.
You know what's holding up really well? Bitcoin.
I was going to ask, what is it happening this week? This Friday?
It's on 420 because, of course, it is.
Of course it is.
Oh God, I hope so.
Yeah, so I mean that's also front and center too, just to see kind of how things react to that, because I mean that everyone knows it's happening, so like it's not news, right?
No.
So I'm watching the miners closely. I'm watching Coinbase, MSTR. They're all kind of trading around some interesting levels currently, so those are on my radar as well.
So can we never talk about it again after this week?
What, the halving? No, because then the countdown starts to the next one.
Oh my God.
Yeah. And that one's also not going to be a surprise either. Like, we're going to see that one coming too.
And Louis will be on Friday too, right? For talking about this Crypto Friday.
Louis might.
Yeah, that's right. So what is it, 420 on
420.
Oh, it's next week.
This Saturday. All right. Congratulations for those who partake. Want to hit that bumper, Spencer?
Was that intentional? Like, is it on 420? Like how Twitter used to, or Tesla used to release press releases on 420 kind of thing, or that's just coincidental?
I'm pretty sure it's just how it worked out, to be honest. I think it was just the crypto gods, right? Just they wanted this to be this way. So that, it's what it is. So just a little parenting advice. I learned this one yesterday. I thought it was lovely. Went to a birthday party last night, and it was a 2-year-old girl's birthday party. So like Elsa and Anna were there. But it wasn't just a little girl's birthday party, because she's got a bunch of cousins and stuff like that, boys and girls, right? And I have 2 boys and a girl that I took to the party. Olaf was also there. So there was an Olaf appearance, not just the princesses, and all the little boys love Olaf. I love Olaf. So I just thought that was interesting. I hadn't really thought about that. If you're going to, because I had a princess party like last summer, and we didn't have, any males there, anything for the boys. It was just princesses. It was like Sleeping Beauty, Anna, Elsa, maybe one more. And no Olaf. So I thought Olaf was a nice touch last night. Just wanted to throw that out there.
Nice touch.
All right.
I've also got a lot of parenting going on this week. So my recess, I've got 6 children in my house this week, 3 on top of mine. So my girlfriend and her husband are off for the week or away for the week. And so I took her kids. So 6 children, 8th grade to 2nd grade. It's chaos.
Wow.
So I'm just lucky. I'm just thrilled to be here and actually made the show on time. So that's what's going on in my life.
Props to Mary.
Lots of kids.
Wow.
So many kids.
Good luck to you.
Lots of noise. Thank you.
All right. My recess is nobody outside New York will really appreciate this, but yesterday I had to go pick somebody up from the airport at LaGuardia, and my goal was to get there at 7:15. And I got there at 7:12. And I just want everyone to understand how hard it is to get to where you want to go.
You get lucky sometimes. You got lucky.
Sometimes you get lucky. And I had to face New Jersey and New York rush hour traffic, and I was early. Sometimes the guys are just on your side, and they were on my side last night. So I was tremendously proud of myself for timing it as well as I did.
I feel you, Spencer. I spent a great deal of my life sitting in traffic in Southern Connecticut and New York.
PM, Rachel, PM.
Why would you go pick somebody up? Why wouldn't they just take an Uber?
Those roads.
They're not from around here,
Personal
man.
touch.
I wasn't gonna go.
That's what people
Nate.
do, JC. They drive their friends to the airport. That's what we
Yeah,
do.
maybe in San Diego because you're right next to the airport. This dude is like freaking multiple rivers away, bridges and tunnels.
Yeah,
for
I
days
crossed
just to
2
get there.
bridges for this guy. Can you believe it?
You got the Hudson River, you got the East River.
Yeah, I know.
That's got to feel like quite the accomplishment. Good for you.
I was
Nice.
and the person I was picking up is lives in Minnesota. I was like, I just want you to understand like how good I did. Like I did really good today.
Good job, Spencer. Good
Thank
job.
you. Thank you.
Listen
Good
to
job.
the podcast.
You gotta take care of those Midwesterners, especially
Yeah,
when they
right.
come into the city.
Right.
You get all
Exactly.
nervous. Mary doesn't
We
ride
do get
the
all
subway.
nervous. No,
Yeah.
I don't ride the subway. Get a car.
All right. Okay, so that's what we got here. It's Wednesday. We have our weekly analyst meeting in a little bit. We got the hot corner at 1:00 right here on the channel, Stock Market TV. Thanks to our guest today, Sam Rowe. Thanks to Mary. Thanks to everyone in the chat for hanging out. Any questions, comments, concerns, email us. Our email is in the description. You can always email us questions or whatever you think, or people you want us to have on as guests, or whatever you like. Hit the like. Thank you very much, and go make some money. And we'll
YOLO
see you later.
responsibly. It's a mess out there.
Always.
Hump day.
Run it. I can't take no loss.